Good morning everyone. It's already starting to be the feels of Diwali. So let's get started and tell you about all of the top stocks that you should be watching out for in today's trading session. Well, let's begin with a whole host of numbers that are expected later today. You've got earnings from the likes of Tata Steel, ONGC, Graphite India, as well as Equitas and GIC. So here's what you can expect from Tata Steel today. The Q2 consolidated revenue is seen coming in at 34,455 crores versus 34,579 crore rupees. The profits that are attributable to shareholders are seen coming in at 25 crores versus 4,144 crores, but the profit estimates vary significantly because do remember in the last year, same quarter, there was a deferred tax credit component of 4,365 crores. EBITDA is seen higher by 8.7% and margins are expected at 12% versus 11%. The higher realization as well as the lower coking coal prices will aid their India margins, and the EU business EBITDA loss that is seen continuing. India volumes could be at 3.5 million tons. Getting a move on then to Brasim, which came out with its numbers yesterday post market hours. Absolutely unchanged when it comes to the revenue on a year-on-year basis, 18,400 crore rupees. You have the profits coming in at 1,521 crores versus 1,472 crores YOY. EBITDA stood at 4,471 crore rupees versus 4,117 crores, and the margins came in at 24.3%, rising from the last year's 22.4%. The company has divested their fertilizer business to Indorama Corporation for 2,649 crores. Eicher Motors revenue from operations absolutely flat at 2,166 crores. Profits slumped nearly 35% to 343 crores. Margins shrunk to 22.1%. CLSA has a sell rating with a target at 2,000, saying that the cost controls have driven the marginal earnings beat, but the management has indicated that supply constraints are largely resolved. They say that the operating metrics have underperformed their peers. Alright, let's get a move on to Sun TV then, which came out with a healthy set of numbers. It pretty much beat our estimates. Revenues at 768 crores versus 803 crores. On a year-on-year basis, there was a decline. EBITDA margin stood at 65.4% versus 59.6%. PAT at 335 crores. UBS maintains a neutral with a target at 460, saying that in-line trends, ad recovery is on track, sequential ad revenue growth as well is on track, and there's a large movie pipeline which is positive, and Sun Next investments are yet to commence. And finally, Phoenix Mills delivered quite a disappointing set, a loss of 38.2 crores versus a PAT of 74.8 crores. Net sales dwindled to 215 crores versus 415 crores, and margins at 42.6% versus 50.8%, so disappointing.